Oh, so now I'm going to go to the slideshow. Um, I have to hit share. Does everyone see that?
Yes.
Right.
Yes.
Okay, so hopefully I'm going to see people as they start to join the meeting. Hi, my name's Tyson Halsey, Income Growth Advisors. I'm going to talk about the turning point in gold here and the commodity super cycle. And I'm going to be joined by Mitch Bulajic and Mike White and Peter Espig. Mitch is a quantitative strategist who's worked at ITG and several large hedge funds. Mike White, who's already on, and he has 30 years in the mining industry. And Mitch Bulajic is joining us. So hopefully Peter will join us. Um, and yeah, Mike White starts early in mining development, and he's got 3 decades in the space. And Peter Espig. So moving forward. I guess the real story here is a little bit of my own. I made a lot of money in the 90s, not a lot, certainly compared to some people, but I actually got out the day before the top. I had a great technician, said everything gapped open, you got to sell it, and he was spot on. I was up in March and April of 2000. Bob Farrell called me, told me I was the only tech hedge fund in New York or the country that was up those 2 months. So I got out at the top, but I managed to give back all my gains and more because I never rotated into new themes, new value. I got kind of had recency bias. So I spent a lot of years reading and licking my wounds. And so one of the thoughts is that there are cycles in the market that you want to be in bull markets. But it's not just bull markets in the stock market. It can be in commodities, or it can be in currencies, or it could be precious metals. And one indicator that's been very effective is using the S&P versus the PPI, or it's a commodity versus financials uh, ratio. And we had inflation in World War One. We had inflation after the crash into World War II. We certainly had it in the 70s with Vietnam. We had it in that post 2000 period. In Iraq was a war then, and we have Ukraine and Iran right now as factors. And Felix Zulauf was on a Zoom call that I saw, or a YouTube, and he said we're going from a monopolar world to a multipolar world, and basically saying it's been the U.S. dominating, and we're going to start to see China and perhaps other players start pushing against each other, and there are going to be, issues, and that's what we see in the Ukraine, and that's what we're seeing in Iran, and so there's going to be more military spending, and that's going to be inflationary, and that's going to take away from pure growth, and I think that's a good way to look at it, but what I'm looking for are what are the assets that do well in an inflationary environment. And what I would say they are, without a doubt, gold, precious metals, oil, energy, small caps, value, um, and the dollar tends to be weak. And, stocks don't do as well, bonds don't do well, and actually, cash does well in a inflationary environment. So having more cash, no investment advisor who thinks about himself will tell you that, but the reality of it is that's a nice, safe place to be. Um, the market's terribly expensive. The Cape index is at 41. It's close to the high in 2000. And that's we know it's expensive, but it seems that there's been a lot of follow through and strength, and will continue to be. But will it be for all 500 of the S&P 500? I don't think so. Um, so one of the areas that I like in particular is gold and what's driving gold. One is the debasement trade, and that is, the finances of the United States with a ton of debt, a deficit, is not unlike Japan and France and Italy. And those currencies aren't worth what they are because they're bad credits. We're no longer a good credit. But it's not just us, it's everybody, or a lot of people, a lot of the majors. And so that makes the value of gold very attractive. It's why central banks, foreign central banks, are accumulating it, and they've been accumulating it at a uniquely maybe double the pace they have historically. And now gold is the largest reserve asset. And the argument that they're going to, I think that there is a good argument that they will continue to own more gold because it actually helps a lot of countries with their trading, especially if they're going to trade away from us. And secondly, I think there's a paradigm shift in thinking on asset allocation. We've been wed to the 60/40, and to me, that's really started to look dubious in recent years as interest rates have been moving up. And so allocating more to other assets, emerging markets, international, gold, silver, etc. So one of the things that's driving gold right now, sorry, is Kevin Warsh, or uh, expectations for the Fed. We started the year, oh, we'll see two easings. That's what Trump wants, and Warsh will do what he tells them. And in fact, Warsh came out and said, no, I'm going to be independent. And, you know, he was put in as a chairman about a week or two ago. And yesterday he said, you know what? We're starting to see inflation come down. And, but the point is we got psychologically to the point of maximum bearishness in terms of interest rates. So that should actually be a positive for gold. Um, in terms of what's going to drive the commodity cycle, here I got this from a guy, Dan Dreyfus, on the All In podcast, Bornite Capital, very smart, great thing. I'm sorry I don't have the link, but he's talking about the new areas of growth, aerospace, a trillion, the grid, transmission and dilution, a trillion, uh, power generation, hyperscalers, semiconductors, and defense. And all these need critical minerals. And so that's going to be very important in driving a commodity cycle. Going back to the current conditions, we've had a big spike in money supply. I guess that's not surprising. Um, Looks like the largest increase in 5 years, and that should be positive for gold. Gold miners, have broken out above a trend line, and they've had a pullback here. And there is a belief, and I'm a cautious believer, that we have more upside to this gold trade. It's not going to top at 5,500. And we had a sell-off here from 5,500 to 4,000. And we are as oversold as we were in 2008. And I think that we're due. My own estimates of where could we go. I mean, you look at charts as a comparable, what could happen. And we had an 1,800% run from the 1970s to 1980, but that was off a fixed $35 an ounce level. So that was kind of fake. But this other one from about 2009, excuse me, from 1999 to about 2011, we went up 617%. So the average, assuming this where we are now, we think that we could get up to 1390. Could, if everything just lines up, could be where we get. And obviously, if that happens, that'll certainly help all the gold miners. Um, I'm using some work by Tavi Costa. He used to work over at Crescat, and I think his work is very insightful. And here is a chart showing that gold miners on a free cash flow basis relative to the S&P 500 is historically cheap. So what you want to do in investing is buy something low, which is showing very compelling valuation metrics and has a good long-term story. And I think gold and gold miners have that. Um, and but other areas that should do well in this inflationary environment, just look at what's happening now. Small cap, value, and emerging markets. Again, those did not those worked actually in that 2000 to 2010 period. And, I was still going back and looking for the best tech stock because that's where I made all my money, which is typical recency bias behavior. And consistent with that, here is a chart showing Latin American stocks versus US. They look like they're buying. We saw a nice move out of Argentina a few years ago. And I think one of the biggest drivers right now of gold is the fact that more central banks are buying gold than U.S. Treasuries. That crossover occurred maybe 6, 9 months ago, and I see no reason that it won't stop. Um, I'll digress. Druckenmiller made a very compelling case to suggest that usually when you get a political event such as this Iran conflict, you usually it's a risk-off trade, but the central banks in particular, will sell gold first, just buy U.S. Treasuries. What that does is it knocks gold down and drives up demand for the dollar. The dollar goes up, and foreign investors say, "Oh, my gold's going down even further because they own it in U.S. dollars." So you usually get selling for a period of time, and I think that selling is over. That's what I'm seeing in the charts, and there's obviously hope. There are no guarantees, but it looks like we got a turn. And, in a broader sense, in terms of commodities, there's an interesting metric where you look at what is the percentage of a certain industry relative to the S&P over history. And I know that if you bought, oil stocks in, you know, around 2000, or excuse me, around 2020, they were very attractive. Everyone hated them. We've got the world is burning up and global warming and all that. And all these endowments are dumping it. And then, oil was something like 2% of the S&P, down from 20%. So this is a metric to keep in mind, but I think there is uh, a case to be in the commodity space that's very compelling and potentially multi-year. Um, and that's my hope. That's my expectation could be. And if you look at earlier chart, those cycles tend to run 10, 20 years. Here is the VanEck Gold Miners Index. It had a nice run. This goes back to 2010, 11 when it peaked. And we've been in a 14-year bear market. We've broken out of that. We've had a nice run. Now we got about almost a 50% retracement just in terms of this most recent move. So that's a pretty healthy pullback. And now that it seems like fundamentals are starting to be more supportive of gold, very excited. I do own almost 6 million shares of a company called Blue Lagoon Resources. I followed Crescat Capital and Quinton Hennig, one of their geologist, PhD, seemed to be uniquely interested in or excited about the prospects of this particular operator, which is in British Columbia. And what's unique about it is it has this huge uh, undiscovered or undrilled resource of the type that can be very, very large, called a alkaline gold deposit. And it could be a carbonate in certain parts. And these can be some of the largest resources in the world. You actually have some in Papua New Guinea, Baritica and K92. But so what I like about Blue Lagoon is you're getting in kind of on the ground floor, and they've just started mining, and we see their cash flows from operations being very strong, and could drive prices up. They announced last month that they are at a commercial production level, 100 tons for the last 30 days, and they expected to get to 150. And that would suggest to me, that we could see valuation, the cash flows would go to 168, 250, whatever, uh, 300 by year end on an annualized basis, which would translate to dollar 11, 167, and 223. And so those are, from where it is now at about 50, 55 cents, I think that there's a lot of upside and there's a lot of potential. And here it is on a chart with some of my numbers. So I think, you could be there at year end. And what it doesn't include actually is the benefit of uh, some of their exploration or drilling, but just the fact that they will be generating cash flows, spending half of those cash flows on the drilling, which allows you to quantify uh, the the amount of gold that they have, put it on their balance sheet in a 43-101. They will now be able to do that. And the Lassonde curve and people in the industry will say it is when you get into the drilling period of a gold mine, that is when you have the greatest upside in a stock. And so, if some of the estimates go that we have and what I've inferred, what the potential is, this could be an enormous stock. And that's what I'm hoping for. But, if I end up with a double or a triple, every year, I'm going to make a lot of money over the next several years. And that's exactly what this company offers. I don't think it's a great I'm not the only person who believes that the geology is very good. In fact, I don't know anything about geology, but I know Quentin Hennig likes it, and they own 10%, or Crescat did. And Nicola Mining, their miller, their processor, Peter Espig, who should be joining us. I don't know where he is. When I have Mitch come on, I'll give him a call. Um, they own 7%. He's loaning them $2 million. He told me he and his wife own it personally, like a million shares. And I met him when I went to the gold mining the gold mine opening in British Columbia last summer. And sorry, folks. IBK Capital, Mike White, again, formerly the Merrill Lynch investment bank for resources in Canada. They own shares. They believe it could be a district scale opportunity. Phoenix Gold Fund, which is interesting because they're out of Papua New Guinea, where you get a lot of these alkaline resources. So that they're making this investment in Smithers makes me feel good. The most recent acquisition by Ocean Partners, and they are the off-taker of the product the that is produced by Nikola. So real quick, last year in Beaver Creek in September, there was a big mining conference and 33 people showed up. A couple majors did, and Rana Vig said on a couple calls, one well-known, he can't say the name, came in and said, we are the largest miner in Canada and yada, yada, yada. And they're a huge company. Don't know the name. But we're very familiar with these alkaline structures, and you guys have an 18-kilometer strike that is not explored. And so we want to follow you. And, it is my hope that as this thing goes up, as they succeed in proving out the size of that resource, this company will get bought out for, $5 billion or something crazy like that. I won't throw out any names, but British Columbia, you can take your wife and kids to. Most places in the world where there's mining, you wouldn't want to take your wife and kids. In fact, you might not want to be there yourself if you can avoid it. So there is a nice, safe province. And, Quentin once said, this I'm not going to stick my neck out and say there's another Pagora, which
Or
is 32 million ounces, but I'll take half that. I mean, that's just what the upside is. I can't make a prediction on AI 5 years in advance, but I can certainly do some math with what the potential of a resource is, particularly when very smart people are flagging it as having, significant upside. Stop buying it when they stop finding new gold. That's not that hard. This is a magnetic picture from above. That's that 17 kilometer. Here is the Boulder
it's a Boulder
vein.
vein.
And I actually went into the mine, so I've been there, and they think they have 1 million ounces there, and that should be discovered. And they've got 15 other veins right above it, and then near and that they were actually found by Noranda, which owned this property in the 1980s and early 90s. They spent 60 million doing exploration. So the fact that they can just piggyback on that, they're going to start spending some of their money on drilling these, and they're going to ultimately, look at, some of these other areas. And then that 18-kilometer strike. And, how big can that be? Mike White was kind enough to talk about some comparables in the past for what gold is worth in the ground. He said, in the past it was like $200 an ounce for an operating company, or maybe 200 to 300. So call it $250. And if they got 1 million ounces, then you could be adding about $1.65 just in resource value in the next year as they are going to start doing this drilling. And that should commence in September. And now that they're generating the cash flows, they still have to spend on development, but they're generating those cash flows, and those cash flows should grow. So I think that the long-term potential, I mean, over 5 to 10 years, I mean, if you got to 10 million ounces and it's $400 an ounce, I mean, that's a big number. But that's very speculative to say those numbers. But, if it is one of these tremendous resources, that's what the potential is. And, I'm happy to own any double, but if it could be up 10 or 20 or 30 fold, I love it. Anyway, that's me. And you've heard this pitch before, so forgive me. But we're going to now start with Mitch Bulajic. Mitch, I'm going to try to flip you on. Hold on a second. Let me figure out how to do this.
Can you hear me good? Just make sure my mic is working.
Yes, go ahead. You sound great.
I need to share.
All right, and I'm stop sharing. There he is. Mitch Bulajic, Walter Harrison, welcome. And Duncan Riefler, good to see you. Go ahead, Mitch, fire away. Tell us about the world markets.
Uh, I'm just trying to, I'm having problems sharing. Ah, there it is. Just give me a few seconds.
And
You have to
welcome, David
accept my
Allen.
I sent your request
I
for
just
sharing.
responded. I just
Okay, good.
responded.
Okay, do you see my screen?
Yes.
Okay, I'm going to talk a little bit about gold. Gold is just one of the things I follow, but specifically because of the reports came today, because of the activity in the last few weeks, I think this is a very important, potentially turning point for gold. And this is the way I'm looking at the situation. So, first of all, there's a couple of things going on the way I'm looking at it. The technical picture is improving, speculative position is turning higher, and option markets are increasingly set up for a squeeze. And that's probably the most important factor. I'm not getting into long-term trends here, like what you mentioned, Tyson, about central banks buying what we know that, but this is really the short-term technical quantitative factors that are going to be critical in making this, confirming this bottom potentially reversal. Dollar is the key, always following the dollar. So basically, even a pause in the dollar is going to do very good for gold. So any type of surge in the dollar was not really gold friendly. Right now, with the reports we got today, we are getting that pause at least, if not continuation of the slide of the dollar. So this is inverse chart, by the way. This is dollar inverse to gold. So its correlation is there. So any pause in the or reversal downward to dollar would be very positive for gold. Okay, speculative rotations also are the key. You know about the semiconductor frenzies acting like a magnet for capital, draining flows from many other assets, including gold. Moving from one place to another. If dollar also pauses, which I just mentioned, gold could become another beneficiary of this rotation. The reason we have the Kospi in this, because that was kind of the central pulse of this technical semiconductor frenzy. So again, very positive. Any rotation happening after report today, gold is going to be a first beneficiary. And these are the specs. These are the gold specs that are pretty much in the bottom. If they come into the game, and they're slowly coming into the game, that's going to be another force for the gold up. So what has been going on in the option market is that the fall in the gold was accompanied by a strong bid for downside protection, a reversal of how gold volatility typically behaves. Now, investors have chased puts into the sell-off. They were leaving the options market increasingly skewed. It was just incredibly skewed. A bounce could trigger the opposite dynamic. Right now, we're in a significantly negatively skewed market for gold, gamma, negative skewed. Literally half an hour after the report today, this has turned positive, first time in 2 months. So for me, this is a very critical indicator for gold. Now, having said that, this is something I put together before the employment report came today. So I'm just going to share with you my little seat sheet following the gold report. Okay, so this is what I put on my table before the report, thinking that this could be critical for gold. So what matters? Strong job data that gives the Fed Chair Kevin Warsh cover to implement a rate hike in September, not good for gold. Dollar up, interest rate up, not good for gold. Clearly, this is what happened in green. Weak jobs data suggests a slowing economy, favoring a rate cut and potential rally for silver and gold. I was watching 3 scenarios, A, B, and C. We got the A scenario today, week below 100K jobs. That was a 40% probability. It came through. That's a potential recession signal. And my idea that would push silver to about 65 to 70 in the next few weeks and gold back towards 4,200. Nothing dramatic, but again, this is a consolidation reversal. Revisions also very important because Wall Street's now increasingly looking at these revisions. And we had revisions for the last 2 months, both. They were really down. Now, a very interesting thing I'm going to share with you is something very simple. Okay, so this is like a quick overview of the employment.
But tech services. Discretionary is obviously negative, but I thought we would start, Josh, with what I feel is the market's role reversal, if you want to call it that. The top 3 performing sectors in April and May were in the bottom 4 in June. So the market sort of turned itself on its head. April and May, tech was up 42%, comp services up 22.5%, discretionary up 18.5%. Now, over the last month, for all intents and purposes, you've got June down 3.5%, discretionary down 5%, and comp services down 8%. Is this a tell of what's to come?
I think you couldn't ask for a better setup to go into the second half than having sort of a catch-up trade in certain areas, having some of the
What was that about?
I think he was on another call. Just continue.
Oh, okay. I thought this was like a question to me, and I was like, okay. All right. Interesting thing. I have a setup that I created. I work in tech industry with AI, and basically I created my own AI platform and system. So what I did specifically for this jobs report, just one of the things I do, is if you're going to react very fast, I'm not a day trader, but this is a very important report, and you figure you got to react fast on the futures market and on the open. So one thing I did is I created a trading agent that was specifically directed. As soon as the tape from Interactive Brokers hit with the numbers, I want you to publish a report. And the report's going to focus on these things. I want graphics. I want everything that I can figure out in 10 seconds. I got this report 18 seconds after the Fed announcement. It's kind of just an interesting little anecdote, but for me, it works very well because it tells me exactly what I do. So 18 seconds after the report, I'm reading this. Okay, what do we have? Unemployment rate, hourly earnings, non-farm payroll. Revisions, very important for me. I need a visual here. How does it look? Interpretation. As you see, not dramatic, but 2 months low over 70K. If each one was over 50, it'd be more dramatic, but still the trend is there. Revisions are always going down. Household survey, household employment, sharp 1 month drop. Labor force outpaced employment fall. And this was also critical for me to understand where the jobs really. Leisure and hospitality absolutely destroyed, and really sector unimportant jobs, at least for the growth of the economy, are the ones that had growth. I'm just showing you this. This is like a report by itself means nothing, but I'm just telling you how interesting it is for me because I got it literally 18 seconds after the numbers, so I can view it, and literally after 15 seconds after viewing, knew exactly what was going on. That's pretty much for me. I mean, for me, this was really looking at this critical turning point, and I think the asset class that's really affected by the numbers today is gold and silver. So I think we really saw the bottom here. How far up and what volatility you're going to see is questionable. But the turnaround is evident here. Other things just to quickly mention. I agree with Tyson. I'm looking at gold and silver miners, definitely. My play is that I've been long for 2 weeks, Hecla mining, because I like more junior, more speculative plays with miners. And Hecla seems to be a solid company and a good speculative play for silver. There's other things that I don't have time to mention. Generally, I follow AI and how does it affect the market. It's a whole different story. It's still kind of very volatile, but I don't have time to talk about it. And my focus was really on this report today and looking at the reversal and the sentiment change in the marketplace, especially for gold and silver.
Oh, Tyson, you're muted.
So you don't hear me. Hey, Mitch, that was great. I really like that report that you put together that quickly, or AI did. That's really amazing.
Yeah.
A nice summary, very valuable. Mitch did a lot of trading, quantitative stuff. That's why he's on this call. And
Yeah, I
known him for
have.
years.
Actually, that's what I built for myself. I have 5 assistants working for me 24/7 without salary. beautiful. One is purely research. One is like trading agent. Third one is checking all my information, backlogging. Fourth one is doing like parallel analysis of AI stocks, who's ahead of the curve, who's behind. And my fifth agent is really just a trader and just telling me exactly what's going on every second, every news that could be important, how does it affect my portfolio. So, I'm really excited. I mean, I work in that field, so naturally I'm going to take a lot of my knowledge and put it into trading. But that's just kind of as an example, I shared this report I created today. It was it meant a lot because we are overflowing with information. And really, if you know what you want and what do you want to trade and how, AI will actually do it for you. Exactly. So it's really it's a lot of fun and it's good and it's profitable.
Good. Do you have one for money?
What was that?
That was a joke. I said, do you have an AI agent for money so you can get money? Anyway, thank you very much. Let's go on to Mike White. I'm still hoping Peter Espig shows up. I'm not sure what happened there. I hope he's okay. Mike, tell us about yourself. I don't know whether I need to do anything. You should, there you go.
Yeah.
You look great.
Yeah. Thanks, Tyson. And thanks, Mitch. It was a great presentation. So I'm Mike White. I'm the CEO and president of IBK Capital Corp. IBK Capital is 37 years on now. We spun out of Merrill Lynch, Canada back in 1989. The corporate finance mining team opened up IBK Capital. I joined in 1994 and bought out my partners sort of over the years. And now I operate and own it. And our focus is mining and metals. It's about 90% of what we do. We have some other special situations, mainly in alternative energy, but also in photonics and technology. We've been through a handful of cycles as a firm in terms of the resource business, and history certainly repeats itself. It is a cyclical business. We've come off a prolonged bear market. We believe that we're transitioning into what could be a prolonged bull market. The future will tell, but certainly the signs are there. We like to be on the early stage, as Tyson mentioned, in terms of these companies. We work with the explorers for the most part, but that includes early stage production situations as well. Certainly did very, very well in the last cycle on using that strategy. And we're lucky to be involved in some of what became household names. They certainly weren't back then. It was a lot of heavy lifting to get them over the line in terms of raising capital, which is what we mainly do, and putting our own capital into these situations so that they can execute their strategy and create value for the shareholders. We were right at the very beginning of what became Detour Mine. It's one of Canada's largest gold mines right now. Same with Windfall, which is in Goldfields. It was an Osisko company for a while. That's the Windfall project in Quebec. We were involved in the Ring of Fire, which you may have heard about in Ontario. It was a discovery of copper and nickel and platinum, palladium, but also chromite. And we spent about $100 million up in the Ring of Fire with a company called Noront and a few others, like Spider Resources, which was bought out by Cleveland Cliffs. And there are others, the Mesquite mine down in California. This was all the last cycle. And you have to be able to sort of have the vision, align yourself with folks that have similar type visions, and then deploy your capital where you think the projects have the best opportunity to create that value. During the bear market, we were fortunate enough to work with some really good people like Great Bear that had a big discovery in Red Lake that was sold to Kinross for $1.8 billion. We also co-founders of Canada Nickel, which is a play in Timmons, Ontario. And that's Mark Selby, and he's going to create what we believe will be one of the largest nickel mines on the planet. It's a whole new thinking about nickel and nickel production. It's a lower grade sulfide deposit, but heck, why not? We've seen it happen in gold, and it started in Nevada, transitioned to everywhere else in the world in terms of these low grade deposits, including Ontario, Quebec, which are very different climates, cold, hard rock. But we were able to do it, and we see no reason why you can't do that in nickel. And so he's marching that project towards production. We came in at 25 cents in a private round and was in the go public round. And we watched the stock go to about $4 a share from 25 cents. That was Canada Nickel. And then it pulled back a little bit. It's trading around $1.60 or so these days. Anyway, so what do we like today? Well, we certainly like where we are in the cycle. Tyson talked about it. Mitch talked about it. We see gold doing as it did back in the 2000s. You recall it bottomed out at $250 an ounce in 2000. And then we watched it as it marched to about 1800 by about 2012 with a pullback when the financial crisis happened, but then it rallied after that. So we believe we're in one of those cycles again, and we're just at the beginning of it. I mentioned $1,800 as the high. It did drop off a little bit to $1,500, and then it had its initial run here to 5,500. But where it sits around 4,000 today, it had a great move this morning, about $75, 4,122 right now. That's still just a fraction, right, of where it started at, call it $1,500 an ounce for this cycle. I watched gold as it went from $250 to $1,800. And therefore, if I'm using the past to help predict the future, we're just at the beginning of the gold cycle. We like what we see in terms of the equities. Sometimes these rules of thumb tend to stick, and it takes a few extra years or a bit more force to unstick them. And what I'm talking about there is the $50 per ounce in the ground for an exploration company. That's moved a little bit to about $100 now, $200 if they're quality ounces and in production, as Tyson mentioned. But that needs to adjust. We see that adjusting to 400. So if you're investing in exploration and in gold today, not only do you have the lift of a discovery, as Tyson mentioned, the Lassonde curve. We always like to be on the discovery side because we feel that it's the most attractive in terms of return. But you are also, I believe, we're going to see a lift in the price of gold that the market pays in the ground, from the sort of $100 today to $400 as an example. So that's a 4x compounder on top of the exploration work that's being done by the company in terms of developing those ounces into a resource category. So we like to be on that side of it, and for all those reasons. So some of the companies were involved in Blue Lagoon, Tyson mentioned. We like that for the upside on the exploration. It's great that they're producing 15,000 ounces going to 20,000 ounces. We'll probably hear a little bit more about it from Nicola, mining CEO Peter, but we also like it, so production is good, and you'll get your 7x in terms of cash flow, multiple on cash flow, and the company will be profitable, and we're in a rising gold market. So that all works as a small producer, but we like it very much for the exploration upside. It's that multi-kilometer strike length, 18 kilometers that Tyson put up on a slide. There's lots of ounces to be discovered, and you don't have to convert them all to the resource into a resource in order to see value. Great Bear did not put out a resource. Great Bear had a very good data room. It had a very good team in terms of propagating that data room on an ongoing basis. As the results came out of the field, it would go into a data room. If you're in the industry and you wanted to look at it, sign an NDA and you can have a look. And they had every major in there looking at their data room continuously and keeping up to date. So they don't need to have all the ounces proven up, is my point. They just need to show that this indeed is a very large gold system, and I guess uncover it in the sense that they understand the system, so they can say, yeah, it's there, it's there, it's there. We're going to continue drilling over there and over there and over there, and we're going to continue to pull ounces into into the company in terms of showing that in our drill results. And if you want to do your own calculation, you're welcome to come into our data room. That worked really well for the company. They operated on a shoestring budget. They did raise quite a bit of capital after the first few discoveries were made. But compared to some other companies, they were on the lean side when it came to exploration dollars. So That was a great play. But we like Blue Lagoon for that reason in terms of what you can do, like what Great Bear did when you have a very large system. We have others that we're looking at. One of them is Arizona Gold and Silver down in Arizona. It has a large property that we believe is sitting on what could potentially be a large gold system. They're drilling into a vein called the Philadelphia vein. It's got multi-kilometers in terms of strike length. They just got their plan of operation, which allows them to drill on multiple sites. They were restricted to one pad at a time, pretty much prior to getting this new permit. But now they can drill. I believe, this is just my own belief, my calculation, that they have about 1 million ounces in the ground. They're trading at, I think it's an $85 million market cap or so. So that tracks sort of. I think there's upside. But then in terms of the entire project, it's multi-million ounce. And they have a new geologist, Lex, who's come in, and he's starting to better understand the Philadelphia vein. And in addition to that, they have other parts of the project that are showing the potential for a gold discovery, and they're examining them as well. So we're rallying for Lex and the CEO, Mike Stark, and we'll see where we can take that. And then there's one up in Timmons. I mentioned Timmons when I talked about Canada Nickel, but Timmons is an established gold camp in Canada, in Ontario. It's had tens of millions of ounces produced of gold over the last 100 years, and also base metals with the Kidd Mine, which is one of the largest base metal producers in North America for many, many years. And so it's a town that understands mining, knows mining. And there's a company called Loyalist Exploration. In the last year, we went on a buy Timmons, mine Timmons strategy. Tony McCooch has his company called Discovery Silver, now Discovery, and he employed the same strategy, but on a large scale. It's a multi-billion-dollar company now, and he bought Glencore's assets, the Kidd Mine. He bought out Newmont's gold assets. We're doing kind of a Tony McCooch Discovery Light with Loyalist. We're picking up some of the smaller projects that are in the Timmins area. We've made 4 acquisitions, as I mentioned, in 12 months, and one of them is the Tully Gold Project. That's about 200,000 ounces or so. They're going to put out a maiden resource on it, but that's just the start. We think we can multiply that by 8, 10, 12 times just by drilling along a very well-known structure. So we've been layering in a technical team. We've got a mining engineer. We've got a geologist, an ex-Agnico Eagle geologist, and we just picked up JP Desrochers as a director, and he's a structural geologist. He helped us at IBK tremendously on the Windfall project, which I mentioned is now owned by Goldfields, and made us a lot of money with the discovery of that. He was the mine that unlocked it, had those ounces hang together, and so we're quite excited to have him on Loyalist. It's early days for Loyalist. It's literally a penny stock, but we really, really like it. Flipping over to critical metals, there's a company called Peloton. They're in Nevada, Northeast Nevada. They're right next door to Surge Battery Metals, which has the highest grade lithium and clay deposit in North America, we think, in the world. And it's drilling up and proving up that deposit, pushing itself towards development. And that's on the heels of what Lithium Americas has done, just a little bit further to the west. They're going into production with GM as their equity partner and offtake agreement, offtaker, and also the Department of Energy, which has put up about $2.6 billion. GM put up $1 billion of equity. And so that's going into production. That's lithium. Peloton has lithium on its side of the fence. It's in the early stages of drilling. We think it'll have much the same as Surge, but it also has other critical metals, including rubidium, cesium, and gallium. Those are kind of special metals that maybe not everybody knows. They're not household names, but they're really, really important for what we're doing. Rubidium, as an example, is important in defense. It's important in AI data centers. It's important in the infrastructure for those data centers and communication with fiber optic cables. It's important in batteries. It's important in solar energy. It hardens solar panels. They can be used in aerospace. They can be used up in space. They can be, like I mentioned, defense, but can also be used for defense purposes. So it's actually used in the medical world for imaging for your heart right now, but they're thinking they could use it for imaging to find cancers and other things like that. So really special metal, very important metal. Very small kind of niche market today, about 7 tons a year. But the models that we're running show that could easily go to 1,000+ tons per year if there was a secure supply in North America, which this would certainly be. Right now, it's all in a clay body. The clay body's massive. It's the size of Manhattan. It's 5.5 billion tons of what we know, and therefore very, very large in size. These are district scale type deposits. This one's big. This one's really big. We just need to prove it up. So that's kind of the critical metals aspect and what we like in that regard. Anyway, I think I've taken my time, Tyson, so I'll be quiet, but happy to take questions offline or just send me an email. Tyson's got my contact information. Thanks.
So I don't know what happened to Peter Espig, but I trust he's okay, and we'll have him get back again. He might have been scared to be on this show with you, Mike, because he just went
Yeah, I like
stack
Peter.
up.
Yeah, we had a good meeting in
But
Quebec.
Walter Harrison is a very savvy investor in the gold space, and you're on mute, Walter, if you'd like to ask any questions.
I don't know enough at the moment to ask any questions. I was real pleased, as Mitch was, to see the numbers this morning. I'd like to think that this is the bottom, and I mean, I'm sure that it's safe to buy here. Whether or not we'll have some issues given the erratic way Trump is dealing with the war, who knows? But
Yeah, well, I think we'll have volatility if you just want to talk to the gold market. Remember that March from 250 to 1800, you'd have days where it would swing $50. That was back when you could sort of count on every Friday the US government bashing it down a little bit just to keep it in check, right? With what everything they're trying to do. So, what's a swing of $100, $200, $300 today? It's par for the course, quite frankly, in my mind, and nothing to panic about, right?
no, not panic. But having said that, I mean, I had a big position going in, and it's sobering. I went from being up 14% on the year on March 2nd to being up 1%. But I'm not a trader at all.
Sure.
Mike Portnoy, any questions?
Yeah, Tyson, thanks. I had a question for Mike White on Blue Lagoon. We know they have that big tract and a lot of veins, and they're going to start drilling sometime, hopefully in September or thereabouts. Do you have any insight into what the timeline might be for that drilling schedule and when they might report results of that?
Yeah. I think for more accurate dates, you want to talk to Ranavig on that. That's certainly our expectation. I bug him about it. I want to see it. But the exact dates, I think he's yet to determine exactly what it is that he wants to do on that front. It can be frustrating. I like Rana a lot. I mean, don't get me wrong, right? I think he's doing a wonderful job. What he's been able to accomplish is quite frankly amazing in a jurisdiction like BC, and to have a very solid relationship with the First Nations, who, quite frankly, he just met when he came upon this project, right? To have built that into the relationship he has today is a real accomplishment. But he struggles because you want to push forward on the exploration front, but you also need to make sure that your production is being managed and managed well. And production is difficult. There's no easy gold mine out there. Maybe there were back in the day when we had the gold strikes, and grade could slide you over any bump along the way. But this, especially with a smaller mine, it's tough. It's very difficult, and I think he's trying to sort of shore up his production in advance of a big exploration push, right? So
yeah, just a follow-up. Have you talked to him about this quote unquote data room?
yeah. Well, I mean, I haven't I haven't sort of hammered it into his head. You know what I mean? But I have talked to him about the Great Bear experience, and I've talked to him about the idea of not having to put every ounce into a 43-101 compliant resource. You can let others do that. But this goes back to a discussion we had about, well, what's next, Rana? What do you want to do next? And he was struggling with, well, do I go out and buy a bunch of smaller mines and then I can be a producer, right? I can take that discount out of my stock by not being a one mine company, which makes sense. It makes a lot of sense. But now you're operating multiple mines, and they're smaller mines, and where are they going to be across Canada, North America, other jurisdictions, like Tyson said, that you may not even want to visit. So there was that, but then there was also the idea of, well, maybe just explore. And I said, well, look, if you ever want to be bought out by a Newmont or somebody like that, then you got to show the Dome Mountain complex, let's call it, as being a multi-million ounce ore body, quite frankly. So that's I think kind of where we steered the conversation towards, well, exploration. You got to continue with the exploration, otherwise you're just cash flowing, and it's significant, I guess. I mean, it's much better to see gold at $4,000 an ounce than $1,800 an ounce when you're running a facility like that, a mine. But it'll never get to that point where the big boys will want to look at you. So. There's a lot to do, and I think he appreciates that. I do, I really do. But he's
I
also,
spoke to him this past week, and I was confirming. So you expect to, start drilling in September? He's like, well, I hope to. He said it depends on how our cash flows are. And so I was looking at my model, and the fact is, gold has been going down, so his cash flows are looking a little tighter. They're doing the underground infrastructure work so that they are able to do it. They're doing their mining, but also that development work. And so that is certainly what the intent is. And I think that that's where the 3 million that recently was invested by Ocean Partners was to help them get to 150 tons per day to create the cash flows to make that happen. I guess the question I would ask for Mike White is, so do you think they go to, the 15 veins after that, or do they go after the 17 kilometers? Or, I see there are a couple areas that, one has I don't know what it is, monzonite, and it's a carbonite. Do you have any thoughts on what their planning is, or they're not there yet?
I don't think that they're there yet. There's an awful lot of additional data, right, available to them. Just all the previous work that's been done over the years on the project, and I think his geological team. And remember, the explorers are very different than the miners. They're completely different mindsets, right? And usually completely different teams. You will have some geos in the mine. But the guys that are out in the field, and the ladies that are out in the field exploring, are a completely separate team. So, he's got as he's ramped up on the mining side, he also will have to ramp up on the exploration side. And if I were sitting around the table helping him out with his strategy, I'd say, look, show some good quarters in terms of production. Continue your very strong relationship with Peter, so everybody's highly confident that the milling and that operation is moving smoothly and sort of is as it should be. And we're seeing gold improve a little bit in here. Get your stock price up a little bit, and when the volumes pick up and your stock price is running a bit, I would finance. I would finance. If he's got his stock price up, 150 million dollars, then do 10-15 million of equity. I know that that's something that he has talked about. It's something he doesn't want to do. He doesn't want to dilute his shareholders with exploration. That was the idea of having the mine, and the mine would feed exploration. But you got to have those drills spinning, and you almost have to have completely separate budgets and funding them as you should, because one successful drill hole could add $50 million, $100 million to his market cap, depending on the success of the whole. I mean, it can. It's just that simple. And when you have the potential that his project has, you get the best minds on it and get out there and start drilling it. You don't have to have 7 drills going at once or anything like that, right? This doesn't have to be an Cisco, right, where Sean Roosen is shut up and drill type of attitude. But at least have 1 or 2 spinning and go after the low-hanging fruit. Go after the easy holes to drill, easy pads to put into place. Keep that budget tight and go after the ones where your geo say, yeah, here's a vein, it runs 2 feet wide. It's got very high grade gold at surface. We've trenched it. We can see it, and we want to put a hole in it and let them do it. Let them get out there and do that, right? But go after the easy. Go after the easy stuff first, right? Go after.
What about something like Kinross coming in and taking a position?
Oh, well, you can invite them in, absolutely, especially if you're going to say to them, look, this is our program, right? We brought Rob McEwen into, including McEwen Mining, into Great Bear at $1.45. It was ultimately sold for $28 a share, but we brought him in very early on because of a drill hole. I caught him in his kitchen. I've known Rob for many, many years. It was late August, and I said, we've got a discovery. Like, this is a discovery. These guys really understand it. We had visited with them in the past. We had gone through it. Quite frankly, it looked like a pincushion. It was kind of like you're looking at this area, like, how could there be any gold here or any more gold or what? And they said, no, this is district scale. We have a north limb, we have a south limb, we have a hinge. We just need to get at it. We just need to get out there. They were operating on a $250,000 Canadian budget per year. And this is Chris Taylor and his team. And so they did it. They made their big hole was actually into the hinge. And that sparked the stock. And it ran from, I think it was around 50 cents at the time, 60 cents or so. It went to almost $2 a share. And we did a financing at $1.45. So yes, Rana should be chatting with industry and chatting with those that ultimately might care. And I think he is. But yeah, invite them in, become a 9.9% partner or something like that. You don't want them to have too much stock because you don't want to take that takeover premium off the table. But yeah, it lends a lot of just a lot of credibility to the project by having a partner like that.
Well, I'm going to wrap it up here because we've hit an hour. Thank you, Mitch. That was great. Mike White, that was brilliant as usual. And thank you, everyone, for joining our call. And anybody needs any numbers like Mike's or Mitch's, give me a ring. And thank you for joining us today.
Hey, thanks, Tyson.
Happy Independence Day.
Yeah.
Thanks, everybody.
Take care.
Thank you.